folks, and welcome to our Wednesday evening training, where I'm going to be today doing another one of our live training exercises, where basically we're looking at a live chart here, and I'm just going to show you how we do that analysis in real time. But of course, I'm going to be using a much lower time frame than we normally do. It's normally the 4-hour and daily that we use, but in order for this to be a really useful exercise, I'm going to be using, once again, the 5-minute chart for my selection time frame, and then drop down to 1-minute chart for execution. So we're looking here at the USD JPY on that 5-minute chart, and in a minute I'm going to tell you why. All right, but if you're enjoying our stuff, then again, as always, I really appreciate it if you'd hit the like button on this video. And if you are getting value out of our content and our free training from professional forex traders, then do yourself a favor, if you haven't already, subscribe to our channel and hit that notifications bell, because we bring out material on a regular basis, and you want to be there as it comes out. All right, so why am I looking at the dollar yen? The main thing, obviously, is that this morning we had a bit of a bearish breakout on this time frame. We had a previous support level being nicely respected through the course of the night, but that was solidly broken in the last hour or so. And once that bearish breakout had taken place, it didn't take long for something of a retracement to take place. Now, one of the things that we like to do with our core strategies, obviously, is always trade in the prevailing direction on the selection time frame. And of course, now that is on the 5-minute chart here, which is bearish. So the bullish retracement over here is something that is either going to come to an end or not. Now, remember, as price action traders, one of the main principles that we use in our multi-time frame technical analysis is recognizing that a wave on the higher time frame is in fact a trend on the lower time frame. And that trend is defined in two ways. First of all, in terms of cyclicity, it's an intact sequence of phase 1 and phase 2 waves. That is also another way of putting that, I should say, is in terms of the other element of price action, which is support and resistance, is in this case the consistent breaking of resistance and then respecting of support. Now, when either of those two things breaks down, then that means the trend has broken down. And if the trend has broken down, it means the wave is also over. All right, so here is our wave line as we drew it in just now. I'm also going to just put it in as a trend line. Now, the next thing I'd like to do is just point out that the cyclicity up until now has been very much intact. I just want to change this so we can see things a little bit more easily. Right, so using our usual, for the first of the 3 steps to heaven in terms of drawing our wave lines in, you can see that it looks like that for the first time ever since we had the start of the bullish cyclicity taking place, we are seeing a breakdown in that bullish cyclicity. If this high gets ringed in the next few seconds, let's bring up the market watch so we can see where we're at in about 33 seconds time. Then that will mean that this bullish cyclicity is in fact over. Now, what happens when we have a higher time frame trend, as we have reason to believe that we have a higher time frame bearish trend here? It's still a potential trend because we've only had the initial breakout, but with that potential trend, what we're able to say is that now we are looking for a resumption of that trend. It doesn't mean it is going to happen. You've got to approach all of these things with that probabilistic mindset. But the fact of the matter is, we are always looking out for the potential resumption of a trend. Now, in this case, this would be a class 3 M pattern. And M pattern, as you know, is a bearish pattern. That in itself wouldn't be enough for us to be able to short this market. And in fact, for those of you who know the difference between an impulse strategy and a hybrid strategy, right now we are more looking for a hybrid setup than anything else. And a hybrid setup is a much more convex type of strategy. All right, but should this close as a bearish impulse candle, which currently it looks like it wants to, that would be a potential short for us. Now, obviously, this being in the 1 minute time frame, the relative spreads are quite high. I wouldn't be doing this on this time frame. Remember that this is just an illustration. So is it? Oh, it just didn't make it, did it? So you see, we need to have that impulse candle. That's actually one of the things that sometimes you might have a little bit of FOMO when that happens, and you really want to get into that trade, but you really need to follow the rules. If this was an H4 time frame, having said that, then this would count. That would have counted. You guys know the difference between daily and H4. So I'm just going to say, let's just, for our purposes here, let's talk about the H4 impulse type strategy. That would have been what our entry looked like. Obviously, we would take the spread into account. Remember, you always add spread to buy orders and a bit of offset. I'll come back to that in a second. We can always we always have the freedom of setting out take profits afterwards, but you must always get that stop in. Let's just illustrate this for you. Lots to do. Right, so that's just an estimate, but what we would normally do is take the ATR, which in this case is only 5 pips on this time frame, bring that back a bit. 5 pips would also being a buy order, add back the spread on this broker. The spread at the moment is 0.3 pips. Right, and then we'd start looking to manage the trade using our 3-6 rule, assuming that this was the H4 time frame. In reality, because the selection time frame is a 5-minute time frame, it's probably more relevant to use the 2-5-step rule for the trade management. But let's just see what happens here. Now, remember with these trades, the hybrid trades, in actual fact, our take profit would be a lot deeper on a hybrid. We'd probably be using the 30-minute ATR. Remember that. I'm sure you guys were wondering about what I was doing there. But yeah, the hybrid strategy, we obviously have much more ambitious targets. And the reason for that is it's a much more convex strategy. So the hybrid probably wins less than 40% of its trades, but the average winner is at least 5 times the size of the average loser. So still very profitable, but remember, it's very convex. So very limited downside with big upside, but the success ratio is quite low. So this makes it a heavily core strategy. It's all the way on the right-hand side of our convexity continuum. Okay, so now what's happening basically is that the market's just floating around a bit sideways. We'd start looking to manage this. Remember the 2-5-step rule? We can't do anything here as yet because of this bullish candle. If this had been a bearish candle, we would have been able to trail the stop to above the highest, or the lowest high. I beg your pardon, the highest high of the last 2 bearish candles, but that didn't happen. So now we've just got to bide our time. Now, the one thing that hasn't really happened here is we haven't seen a real resumption in bearish cyclicity, which is what we would be looking for if this next phase 1 or impulse wave on a higher time frame was in fact going to happen. So the longer that this goes sideways, the more likely it is that we're going to in fact get a bullish resumption. You guys will remember that when we get a trend coming to an end, we have the 3 R's range, which is actually what we've got here at the moment, reverse, which is what we were looking for, or finally, of course, resumption. Now, if you were using the LPO range, it's been firmly stuck inside of that range. Likewise, our HDC channel resistance level is still very much intact, but the lower boundary, the HDC channel, takes some time to catch up. Right, this is not looking like it really wants to get going. Let's just wait and see. Looks like we might get that bullish resumption, which is fine, which is absolutely fine. Also, just to point out, if we were going to update our wave lines here, because we need to keep our patterns going. This is now a W pattern, also class 3. Remember, our C close is inside the AB leg, or XA leg, I should say. So that's that. Look, still testing this resistance level. We can't second guess the market. 1, 2, 3, 4, 5. Just for ease of calculation, remember we would have that offset Normally we use 1% of the, well, normally on the H4 time, we use 1% of the daily ATR. So that just gives us a little bit of leeway when it comes to the trade. So making sure we don't get stopped out prematurely. This actually happened to me on a trade, in fact, on a higher time frame, on an H4 trade where the stop distance, I think, was about 40 pips, and it came to within 1 pip of my stop before then resuming. All right, so this hasn't quite yet ringed that high. We've still got some time left in this candle. So let's just wait and see. But just to point out that we've now got 1, 2, 3, 4, 5. We would, in fact, now be able to trail the stop slightly. But because this came right up to that level anyway, and it was probably only our offset that prevented us from actually being stopped out there, we actually don't have the opportunity to trail the stop now at all. But this does look like it does want to maybe start on its bearish course, or are we going to get stuck in this range? Let's just wait and see. Remember, a key thing to do, especially when you're trading lower time frames, is don't be tempted to second guess the market. Right, so that high now ringed. We can update this to an M pattern. Very nice, testing our support level. Remember, the LPO range is in fact at this level here. Let me just put in a line so we can see where it is. Slightly higher. That would be the bottom of the LPO, and this is the top of the LPO. And, well, it doesn't really want to get going, does it? Now, of course, this is the 1 minute chart, so it all happens very quickly, but there's no difference apart from risk factors and apart from cost factors. There's no real difference in terms of what happens on these time frames compared to the higher time frames. It's all the same kind of stuff. So waiting to see what happens here. Are we going to break the support level? Are we not? Now, as price action traders, remember, that is a key thing that we look for. We look to see what price does around these levels. We don't assume what it's going to do. Our strategies might make assumptions around that based on the fact that we are working the law of large numbers and that we don't actually assume that any individual trade is going to win. There we go. It looks like it's pushing through. Wow, this hybrid trade may well just have survived. Some way to go in this candle, however. Now, the next thing that we would be looking to trade, assuming that this does carry on, and of course, we know what they say about assumption, but let me just get ahead of the game here. If we do get this bearish breakout and then get a retracement, we would then be looking to take a trade on the impulse strategy. So that we haven't yet had the chance to do that. Some folks might say, well, isn't that one there? Well, it depends. Okay, if you are happy to go with class 3 patterns for impulse, then potentially I'm going to look at a slightly more conservative approach, which is to only look at class 1 or class 2 M patterns for a bearish impulse. So this is at the moment stacking up to be either a class 1 or a class 2. So our future point X, A, B, C, and then D would be where we would be looking to enter with a bearish impulse candle. But at the moment, obviously, that's some way to go. The one thing that some of you might point out to me, quite rightly, is that if we look at the break of our trend line over here, we did get the retracement. So in terms of the training that I do around trend lines, once we get the break of the trend line, we look for the retracement back to that. It's like a triangle of resistance in this case. If we do get that, we would after that be looking to enter as well. So now, in truth, as a hybrid, some folks would say, well, didn't we get the break here? Wasn't the trend line maybe a little bit further in? Potentially, because we did get phase 2 over here. But what I do like to do is use the last, in this case, obviously higher low, that was in fact still part of the trend. The trend only broke down when we got the second phase 2, which was confirmed by this candle ringing that high. Now, that means that low, much as it was a little bit outside of the other lows, was still in fact part of the trend. And the simplest way to draw a trend line is obviously from the start through to, in a bullish case like this, the low of the last, the candle that formed the last low. And that was it there. So that's when we got the break of that trend line, retracement back into that area of resistance. And of course, if we were going to get a resumption, we would have seen that broken. This has turned out to be a reversal after a short ranging period. At the moment, in any case. Now, once again, we're not going to second guess the market because things can change at any moment in time. Let's see what happens here. Just to have another squeeze at our 5-minute time frame, you can see that on this time frame we have, even if you're doing single time frame analysis, that high was ringed, in fact, by that candle. I know it's a little bit messy here with me having these lines showing on the 5-minute time frame, but that is nevertheless true. I could actually even drop down to another chart, 5 minutes, and show that to you here. This candle ringed that high, definitely confirmed by that bearish impulse candle, no question about that. So yeah, that's quite an easy one to call on a single time frame. Now here we have the potential resumption of this bearish trend on the 5-minute time frame. Does it mean it's definitely going to happen? No, of course not. But this is how we work our edge. We look for opportunities where it is more likely. All right, so here we're looking at it again on this time frame. Let's just drop down again to the 1 minute. Just move this across so a bit more space for us to bring up our market watch. There we go. And here we've seen that retracement. So this low now ringed, took a while. Now, is it ringed? It's about to be ringed. I'm going to make that assumption. 1 second to go. Right, ringed. Okay, so this obviously being a class 4W pattern, we don't do anything with that, but a class 4W pattern is going to turn into either, well, potentially, of course, a class 1 or class 2M pattern. The only way that wouldn't happen is if this went all the way up and made a higher close above that, above that preceding high. Does it look like it's doing it? No, this is more likely to turn and roll over. Now, if it does, if we get a bearish impulse candle, that would be a setup for a bearish H4 impulse. Well, in this case, M1 impulse, but it seems to be pretending that this is the H4 time frame. That is what that would be. So let's see what happens. Still coming back. So there's quite a few factors with our strategy, obviously, that you build it together to improve not the odds necessarily of winning, but the expectancy of the strategy overall. As you guys know, these convex strategies, certainly on the impulse strategies, long term, win quite close to 50%, but not quite. And a lot of amateur traders don't understand how that can be. Well, it's because they seek to, first of all, limit downside, which is supposed to be what you're doing as a trader, but very few traders actually do that, which just shows them to be amateurs. You must always be looking to protect your downside. In other words, manage risk first and foremost. Most people just pay that lip service, though, of course. But that's what we do with our strategies, and always look to limit downside first. But that also means that we cut our losers, we let our winners run, which is probably the number one principle in successful trading, which again most people know about, but very few people do. Right, still waiting, coming up to a dynamic level of resistance, which is in this case just a 1 minute 55 EMA. For those of you using the case 55 EMA as indicators, you would also see the 5 minute 55 EMA on this time frame, which is also a dynamic level of in this case resistance. If we're below it, still waiting to see if this is going to roll over. Various cycles do other way intact. So if we were looking at this as a selection time frame, we've had the breakout, but it's only a potential trend until we get that second phase one outside of the range. And of course, that's what we're looking to capitalize on if it happens. That's what we're looking to catch. And for those of you who are Ellioticians, you like Elliott wave theory, you would by now probably have recognized that we are trying to catch wave 3. And we all know that wave 3 tends on average to be the longest and strongest of the waves. But we don't second guess the market. We give it a chance to tell us what it's going to do. Right, still making higher highs here, coming up against this resistance level. I find that these 55 EMAs are really good at just as a price action trader, helping me to see what price is doing around different levels of support and resistance. And even that, just that little move over there is showing me that it's respecting that as a resistance level. So if you don't like that, then you're in the wrong place. So how long we got to go? Another 15 seconds. I hope it gives us a decent setup. Now this would be an H4 impulse, which means we would be looking at about 5-6 pip take profit. And remember, we make sure that our minimum reward to risk is 1.5 to 1. Right, there we go. So that would have basically been an entry. I'll come back to that in a second. I'd just like to keep my colors consistent. Right, so decent entry. Let me just put it there. And now, again, remember, we'd still be managing this over here. But if you were using the 3-6 rule on that one, then you would have actually been stopped out if you were trailing it past break even. And in fact, if you had, if you kept it at break even, you'd still be in the trade. And that's one of the options that you have, as you know. So, right, that would be that. Let me just make sure that this is, I'm calling it 5. It's about a 2-to-1 reward to risk ratio, maybe slightly under that. Again, now, this is something where we'd be looking to trail the stop using the, I'm going to say 2-5 step because it's the 1 to 5 minute. And we still can't do anything there. If we get another bearish candle here before it hits the take profit, we'd be able to trail the stop to above this high, which is almost at the break-even level. Now, this, of course, has showed itself not to be a class 1 pattern, but a class 2. I should have mentioned it earlier. But as soon as we got price coming and closing inside the price territory of our future X2, well, it's a current XA leg, actually, then that means it's class 2 instead of class 1. Class 1 would have respected that level of what was support as resistance, and it didn't quite. So it came up to this resistance level. Right, so let's see what happens here. Again, Ellioticians would say, well, this is very likely the first retracement in a 5-wave pattern coming down to give us our wave 3. But we don't know. Okay, so can't trail the stop as of yet. And what an Elliotician would be saying is, oh, what was that retracement? Was it 61.8? And oh, yes, just on the 618 retracement level, which is the average retracement of a wave 2 over time. Doesn't mean it is. This could carry on going up and stop us out. And again, remember, folks, we're winning about half of these. But if your average reward to risk ratio, certainly on the H4 time frame, is about 2.5 to 1, you really don't care. So our expectancy is over 2 to 1 on this. So we're really, really happy with it. Let's see. If we were to get a breakdown cyclicity, of course, that would be a setup for an overlay, a bullish overlay. Let's see if we get something like that. So starts with hybrids, moves to impulses, and when the high time frame wave, which is the lower time frame trend, runs out of steam, that's when we look to trade our overlay. And that helps to scoop back some of those losses that we get on the more convex strategies. Right, looks like it's actually playing ball here. Did we get, this was a bullish engulfing, so for the sake of correct analysis, what I need to do is just move this analysis on. High, these two are identical. So just for clarity, I'm going to move that across to that candle. This again, another class, well, at the moment, class 2M pattern, because it did come back into the XA's price territory. But you would expect with a wave 2. Now, this should be, if this is an Elliott wave pattern stacking up, this should be wave 3 of wave 3. If it is, then we've got a couple of winners. If it isn't, then so be it. And down she comes. So I always want to remind you folks that we don't try to predict the market. This is not about predicting the market. It is a very difficult human trait to overcome, the fact that our brains are predictive engines, as described by Danny Kahneman, and when he got his Nobel Prize for in economics for how the human brain actually works, not how we think it works. And one of our the strongest cognitive biases we have is this need to predict. Having a probabilistic mindset is so essential to being successful as a trader. And that's why I keep reminding you that even when things work out pretty well, in terms of, and I put this in inverted commas, our expectations, then you must. Right, so we were just cut off there for a couple of minutes. And I just wanted to point out that whilst this is all going down, it's really important to remember that even when things work out the way you, and I put this very firmly in inverted commas, the way you expect, then you must be careful not to allow yourself to be drawn into thinking that you are good at predicting the market, because it just doesn't work that way. We obviously use the tools at our disposal, which are first and foremost good technical analysis skills. And as you know, we use advanced price action technical analysis here, combined with an effective strategy. And then the key after that is to apply that effective strategy to the appropriate market conditions as consistently as humanly possible. And that consistency comes out of having that robust trader's mindset. All right, so just to catch up on the analysis here, it hasn't panned out as a proper wave 3 from an Elliott wave point of view, mainly because we got this close inside over here. So that's a sign of weakness where we really would have expected wave 4 to have stayed completely outside of that wave 2's price territory. But, you know, this is what real trading is actually all about. And as you can see now, that would have gone on to hit the take profit on that impulse trade. So, and bringing it back to what we were looking at with our original hybrid, assuming that you put in a decent offset or kept and added the spread to your stop, you would have survived that, and you would still be in this trade as well. You'd probably be waiting. In fact, now, if you were using the advanced targeting with the threshold requirements, now that we are past this threshold, in fact, we should be looking at past this threshold. Once you get past that threshold, you would be looking to trail the stop using the 3-6 rule past the break-even level. So this looks like it is turning out to be that wave 3 now with this very strong bearish movement. Let me just change this so it looks a little bit. Oops, there we go. Right, so what I want to do is just illustrate that 3-6 rule. Remember, if we'd survived the original retracement on this hybrid, once we get past the threshold, the close of the threshold, which actually happened all the way back here, just after we entered our impulse, that's when you would start looking to trail it using the 3-6 rule. So at that point in time, it would mean that we would have been able to trail the stop to above this high. Remember, add offset and spread. And I said 3-6, I mean 2-5. So the next time we could trail the stop is when we got these two lower closes here, which meant that we could trail the stop to above that high. And then that was also marginally a lower close, which meant we could trail the stop to above that high. And then there we had two lower closes which means we would have trailed the stop to above that high. And in this case, that means we would have been stopped out over here for not much more than what we would have made on a standard trade. So that's all well and good. And both of those trades then would be done and dusted. The alternative targeting, of course, with the hybrid is that you could just stick to using the next higher time frame ATR, which I think was about 10 pips over here, because that would be, we could look at the 15 or even the 30-minute time frame actually, because we wouldn't want to just have a multiple of 2, and that would have maybe scooped a little bit more. But you must remember that it's essential to always be absolutely consistent in whatever it is that you're doing. You can't chop and change. Sometimes one thing works out better than the other, and then vice versa. You just need to remember that it's consistency that is the key to long-term success. And in particular, consistency in applying a convex or long gamma strategy to the appropriate market conditions. All right, folks, so this could carry on for a long time, obviously, but I hope you get the picture. Just a quick look again at the higher time frame on M5. Well, I mean, let's go over here. You can see that we don't yet have a confirmed bearish phase 1 wave here as yet. Whether or not that actually does happen, we'll have to wait and see. It may not. But in the meantime, we were able to take advantage of these conditions. And regardless of what happened here in these couple of trades that I've shown you, if you are able to just work your edge like this consistently over and over again, the law of large numbers ensures that you cannot fail. Always protect risk first, then just let upside look after itself. All right, folks, once again, if you're getting value out of my training, then I'd really appreciate it if you would just smash that like button. And also, if you're not already a subscriber, do subscribe to our channel. I do this kind of thing pretty often, and sometimes I do it absolutely live as well, when we can be sure that our connection's all great here between the mountains and the ocean. So if you want to be notified of that, make sure you hit the notifications bell. If you've got any questions, please don't hesitate. Ask the question in the comments below. I answer each and every one of them in person. All right, folks, I hope you have an awesome day further. I'll chat to you all soon. Bye for now.